Welcome to Blue Nile. We hope you are enjoying solving past questions with us. Let's take a look at a big question. We are going to look at a question from the June 2013 exam called Panda. This is question 5 in this exam and covers the following areas: assurance, subsequent event review, and the audit report opinion. This is a 20-mark question. Please note you have 1.8 minutes for every mark, and so no more than 36 minutes should be spent answering this. To successfully complete this question, you will need to plan your answer, taking care with the time allocated to each part of the question. Use the scenario, and have clear and efficient communication. It may be worth pausing the video at this point and printing off the exam question. That way you can follow the scenario as we talk through it. The scenario in the question focuses on 2 events that have been identified by the client shortly after the year end. The requirements beneath this scenario all relate to the information relating to Panda. Therefore, 15 marks relate to application of your knowledge to the given situation. Above the scenario is requirement A, which has no relationship to the remainder of the question. This is testing your knowledge and communication skills only. Let's break down the requirements and plan the structure of our answers. Part A asks to explain the 5 elements of an assurance engagement. This requires you to think back to your studies with no further information given. For each clearly explained element, you will gain 1 mark. It is for 5 marks, and therefore no more than 9 minutes should be spent on this. Part B leans heavily on the scenario. Remember, before reading a scenario, it would be advisable to read the requirements first. It helps to know what you're looking for when reading, especially given the time you have in exam conditions. It requires you to understand the information, and in particular, the 2 events that have occurred. There are sub-requirements, and for each event, we must firstly explain whether the financial statements require amendment. And secondly, describe the audit procedures that should be performed in order to form a conclusion on any required amendment. It states that the marks will be split equally between each event. As this is a 12-mark question, we are looking at 6 marks for each event in the scenario. For 12 marks, about 22 minutes should be spent on this. There is no defined allocation of marks between parts 1 and 2. Out of 6 marks, it would be realistic to plan maybe 2 to 3 marks explaining whether an adjustment is needed, especially if you identify how material the issue is, and include the required accounting treatment given the circumstances. The remainder of the marks, so maybe 3 to 4 marks, should then look at the actual audit procedures auditors would carry out based on these events. There are many general audit procedures that auditors would perform based on subsequent events. The idea is that the scenario should give you food for thought in generating specific procedures for Panda. Part C requires you to explain the impact on the audit report should this issue remain unresolved. This relates to the second event in the scenario, and what would happen to the audit report, and most importantly, the opinion, if the directors do not make any amendments to the financial statements. You must be able to apply your knowledge of the different opinions to the scenario and communicate clearly. 3 points would be needed and no more than about 5 minutes spent on this. Let's now focus on Part A and the syllabus area of assurance. 5 elements of an assurance engagement are needed to answer this fully. To really understand the 5 elements, you must understand what an assurance engagement is. An assurance engagement is where an opinion is made so that the users of the information can make confident decisions. To add more detail to this, we can explain the process of how this opinion is formed. A practitioner will evaluate a subject matter, that is the responsibility of another party, against a criteria to express a conclusion to the user of the subject. Here we can see the individual parties involved in the assurance process. There is a practitioner, who is the party that reviews and forms the opinion, for example, the external auditor. There is a responsible party who prepared the information being reviewed, for example, the directors. And there is the user of the information who may need to base decisions on what is being presented, for example, the shareholders. These three parties involved are our first element of the engagement process. The evaluation of the subject matter is where the practitioner will gather evidence. Remember, the evidence must be sufficient and appropriate. Next is the subject matter, which is the information that is being reviewed by the practitioner and needed by the user. An example would be the financial statements. Then we have the criteria. This is what is used to form an opinion on the subject matter. It must be a suitable criteria. An example would be the auditing standards. The conclusion is the form of a written assurance report where an opinion is shown. Therefore, the 5 elements of an assurance report are the 3 parties involved, the practitioner, the responsible party, and the user. The evidence, the subject matter, a suitable criteria, and the assurance report. Now let's prepare ourselves for the scenario and the remainder of the question. Part B asks for each of the 2 events to explain whether the financial statements require amendment and describe audit procedures that should be performed in order to form a conclusion on any required amendment. Both events have been discovered since the year end. This question relates to the subsequent event review that the auditor must carry out at the completion stage of the audit. Please note that both of these events are before the audit report has been signed, and therefore the auditor has an active duty and would need to carry out audit procedures on both events. There are specific rules in how these events should be disclosed in the financial statements, according to IAS 10, events after the reporting period. You are required to apply your knowledge of this accounting standard to the scenario to decide what treatment should be given. You are also required to consider whether the event is even material, hence why they have given you an indication of the size of each event. These factors will help you answer part 1 of the requirement. The next step is to then generate some audit procedures that would be performed to gather evidence to form a conclusion. As I mentioned before, there are general ideas given in your studies, but using this scenario is key as they must be relevant to the question. Our approach will be to deal with each event in isolation. Let's look at Event 1. Event 1 tells us a batch of chemicals were tested and found to be defective. The discovery was made on the 3rd of May, 3 days after the year end. It is clear that the batch was produced in April, and therefore the defective chemicals were included in the year-end inventory balance. IAS 10 gives guidance on whether adjustments are necessary in this type of situation. It clearly states that if a condition existed at the year end, then there should be an adjustment to the balance. In this case, the batch was in inventory at the year end, and so they were defective at that point, and the condition existed. Panda would therefore need to amend the inventory figure. The next issue is to identify the accounting adjustment. The batch cost was 0.85 million. The revised scrap cost of this batch has now been calculated at 0.1 million. Inventory should be valued at the lower of cost and net realizable value, and so we expect the revised scrap cost of 0.1 million to be shown as the valuation in the financial statements. An adjustment of 0.75 million to show the scrap value in the financial statements would be expected. The auditor should also consider whether this adjusting event is material. It is only material misstatements that the auditor would request to be amended if found. Calculating the 0.75 million adjustment as a percentage of profit gives us 13.4%, which is above the 5 to 10% benchmark. Even as a percentage of revenue, it is 1.4%, which is above the 0.5 to 1% benchmark. We would therefore conclude that this is a material adjusting event, an amendment would be requested by the auditor. These 3 points would answer part 1 for the first event and give you 3 marks. Next, we need to put together procedures performed for part 2. As we have covered 3 marks already, 3 remain. We therefore need to put together 3 audit procedures relating to event 1. As we've concluded amendment is necessary, the auditor should discuss with the client the adjustment and how they came to the revised valuation of 0.1 million for scrap. They could request any supporting documentation of this to ensure the accuracy of this amount. The auditor would also need to review the defective chemical batch. It is unlikely they would have specialist knowledge to identify if the batch was defective themselves, but they could obtain supporting documentation to confirm this, for example testing records, and the list of damaged inventory. It may also be a concern to the auditor whether this damaged inventory was an isolated incident. They would want to confirm that there have not been other defective batches, as this could indicate a poor control environment and the risk of further misstatements not detected. Inspecting board minutes and quality control documents would identify if other events have occurred, which can then be discussed with the client. The best approach regarding these audit procedures is to look at the scenario and think about which areas require a bit more investigating. Use the information given to you and gather evidence to prove the information is right. Remember, auditors should maintain professional skepticism. With practice of these questions, they do feel more comfortable as you see similar events come up and gain confidence on what evidence to gather. Let's move on to event 2. This event is an explosion that happened on the 20th of May, one of the storage locations. Inventory and property, plant and equipment was damaged, valued at 0.9 million, and it is unlikely they will get any insurance compensation. As with event 1, we need to firstly consider whether this is an adjusting or non-adjusting event as per IAS 10. The explosion happened after the year-end towards the end of May. At the year-end, the inventory and property, plant and equipment were not damaged. Therefore, the condition did not exist at the year-end. This concludes that this is a non-adjusting event according to the accounting standards. The auditor also needs to consider the impact this has on the financial statements. If it is a non-adjusting event, then there is no need for the client to write off the damaged inventory and property, plant and equipment. No adjustment is needed for the balances in the financial statements, but some disclosure may be necessary informing the users of the event. Finally, for part 1, once again we should consider if this is a material event. The value of 0.9 million is 16.1% of profit and 1.6% of revenue, which is material to the users. We would therefore expect the auditors to request disclosure be included in the financial statements on this event. Now on to part 2 for the audit procedures. Again, while reviewing the scenario, there are some issues we would want to gather further evidence on to ensure the information is correct. The auditor should inspect the most recent inventory records to identify the damaged inventory and its values. This should be compared to the schedule of damaged items. The auditor would also want to inspect the schedule of damaged property, plant and equipment and compare it to the asset register, again, to ensure the values are correct. The scenario tells us that they are unlikely to claim on their insurance for this event. The auditor should discuss why there is no insurance claim with the directors and even inspect the insurance cover to verify this. As with the first event, there are other audit procedures that would be appropriate for the scenario. The ACCA suggested answer has plenty for you to review. Our aim here is to show you the marks allocated to each part of the question and how to generate ideas. For part B, for both events in the scenario, part 1, you should identify whether it is an adjusting or non-adjusting event as per IAS 10, what the treatment should be, and whether it is a material event. For part 2, explain 3 audit procedures appropriate to the event. Use the scenario to identify the evidence needed and write out as a clear instruction. Finally, part C explains the directors have decided not to disclose event 2, the explosion in the financial statements. The requirement is to explain the impact on the audit report should this issue remain unresolved. This relates to the type of audit opinion needed for this client. Remember, at this stage, the auditor must make a decision based on evidence collected, whether the financial statements are true and fair. If there are no material issues, the auditor would issue an unmodified, unqualified auditor's report, stating the financial statements are true and fair. The problem we have in this scenario is that the auditor disagrees with the accounting treatment. Therefore, the review of Panda would not be that the financial statements are true and fair. The auditor needs to then decide why they are not happy with the financial statements. As this is a disagreement, the auditor would be modifying the audit report due to a material misstatement in the financial statements. They then need to decide whether the missing disclosure is material or material and pervasive. Material is significant to the users of the accounts. Material and pervasive is much bigger than this, as it would indicate the problem is seriously misleading. In this scenario, the event relates to inventory and property, plant and equipment. It is 16.1% of profit, which is material, but not enough to be pervasive. It would need to be more like 60 or 70% of profit for us to consider this as pervasive. A material opinion would be an except for opinion. For example, the financial statements are true and fair, except for disclosure not included on the explosion at an off-site storage location. If pervasive, it would have been an adverse opinion, stating simply the financial statements are not true and fair. Therefore, the audit report would be modified due to a material misstatement. It is a material issue and not pervasive. An except for opinion is needed, and a basis of opinion paragraph is shown above the opinion, explaining the issue in more detail. Please remember, to be successful in this type of question, we need to plan the approach and ensure we have identified how long is needed for each part of the question. Use headings to introduce your answers, and space out your points so it is clear for the marker where the marks can be allocated. Finally, if there is a scenario, use it. This information was given to you for a reason, and at F8 they are trying to see if you can apply your knowledge to a given scenario and not just be able to remember the facts. Thank you for listening, and good luck.